All right, good morning, everybody. How we doing? Welcome. It is August 10th, 2023. This is our pre-market prep session. Vivian, good morning. Carla, good morning. Alicia, good morning. I appreciate all you guys popping in. And your future selves appreciate it as well. Investing in yourself, getting 1% better each and every day is the goal. It's guaranteed you're planting, right? You got to water seed. You can't just plant the seed and expect it to grow. You got to water it, do what's necessary. Good to be here and continue to just plant the seed, water the seed, and see those fruits sprout. I hope everybody had a good morning. I had a testing morning, but still going to be a great day. Going to be a great day here, and I am cementing my resolve in that. Let's see what we got going on in terms of markets here. We had CPI data this morning. We got PPI data. So I'm excited to see kind of what happens. We lost a weekly uptrend last week, and if we hold beneath it, then it looks like a great spot to grab puts for the long term on SPY into short markets. So we'll see kind of how we end up by the end of the week. That will kind of cement everything, but very excited, to kind of see that play out. It's been, kind of straight green skies, smooth sailing, but we want to see some volatility, right? For nice monetizable opportunity. When you've kind of got the same thing going on, things, become less profitable, it's priced in. So you want to see volatility. You want to see there being some type of imbalance between what people expect out of markets, and that actually makes for the most monetizable opportunities. James Bull, good morning. How we doing? Coco, good morning. You guys know why we're here as well. Before I go ahead and dive into things, we're here for a specific reason, right? I'd love it to be a social club. I'd love it to be, us hanging out, but we're here with a reason in mind, and that reason is to get 1% better by the end of each session, right? So let me see here. Carla said you can't hear me. Carla, I think it might just be you. Can everybody else hear me? Let me know in the chat if you guys can hear me. Okay. Yeah, let me know. I'm not using the mic, so I should be completely fine. Carla, you want to possibly leave and then come back to if you're having issues. Okay. Yeah, Carla, let's try leaving and coming back, and that might resolve the audio issues. Okay. Thank you, Vivian. All right, there we go. Awesome. I appreciate it, Vivian. Our unofficial tech support, always on top of it. But speaking of being on top of it, we come here each and every day to invest in ourselves and stay on top of what's going on. So let's go ahead without further ado and do exactly that here this morning. In terms of our top news, we're talking fine print. The market is watching, the Fed is watching, investors are watching. Today's consumer price index will set the tone for discussion about monetary policy over the coming weeks after the central bank raised its benchmark rate in July to the highest level since 2001. Another batch of soft figures could enable the Fed to continue taking its foot off the accelerator as disinflation takes hold of the U.S. economy. Now, by the numbers, while the Fed's preferred inflation gauge is the core PCE, which is the personal consumption expenditure, for anybody who doesn't know, the CPI provides an earlier view of inflation trends. Economists expect July's CPI, which will be released at 8:30 a.m. Eastern Standard Time, to rise 0.2% month over month, the same rate as in June. So that's the expectation, 0.2% month over month. We get more than that, it's obviously not good. We get less than that, that is good. On a year-over-year basis, CPI is expected to increase to 3.3% from 3.0% in June, which was the slowest pace in 2 years. Meanwhile, core CPI is expected to rise 0.2% month over month, the same as the prior month, and is expected to stay at 4.8% year over year. Some fine print is being attached to the year-over-year comparisons as annual inflation hit a peak of 9.1% in June 2022. That means the data and figures are now subject to so-called base effects, which can show an acceleration even if the percentage of monthly CPI increases holds steady. It could also be a factor in why the year-over-year numbers aren't expected to slow much more until 2024, and comparatively a slight increase in the year-over-year pace wouldn't necessarily mean the recent slowdown in inflation is in retreat. So in terms of what else to watch, and then of course we're going to get into the numbers, what those numbers meant, and how that will affect us this morning. In terms of what else to watch, it'll be important to analyze the breakdown of individual components of the CPI. Oil and gas prices have soared this summer, which will impact energy, while food, rent, and shelter costs and healthcare are also on watch. Something that's important to note also is that we're like randomly having a lot of things going on that can serve to increase food prices. We have, Russia kind of pulling out of the Black Sea grain deal, which is a big deal in terms of increasing wheat prices across the globe. And then we also have a unique combination of disease and weather patterns that are affecting oranges. So, a ton of oranges are grown in Florida. Apparently they're having like some type of hurricane season, but also some type of bad orange disease that's happening. So, all of that, I don't know if that manifests in this CPI data or maybe in the next one, but all those kind of create a recipe where we could see, an increase in the average basket of goods that is, purchased by the American consumer. So that is, something to keep an eye on. But let's go ahead and see what we got going on here. CPI report, whether or not someone makes some piping. Okay, so it'll be important to analyze the breakdown of individual components of the CPI. Yes. The PCE report and one more jobs report before its September 19th to 20th meeting. So the Fed, their next meeting is end of September, right? September 19th to 20th. They do have a few more pieces of data. So they've got the CPI today, they've got PCE, and they've got one more jobs report. So I feel like what they're going to do is already kind of locked in, but they said that they're data driven and they'll continue to adjust their game plan based on the data that we get. So we'll have to take them at their word on that. And now I'm going to pull in here the data that we've got. So we got jobless data and we got CPI data. In terms of jobless claims, they're up 21,000 to 248K. We expected 230,000. So that actually ends up being bullish for markets, even though technically in terms of a life standpoint, you want less people claiming they're jobless than expected. In terms of how that affects how Powell thinks about it and the Fed thinks about it, the Fed has two jobs: to maintain full employment and to keep inflation at the 2% target rate. If employment is strong, all they have to worry about is inflation. So if employment starts to show weakness, then they can start worrying about, okay, we need to, maybe stop hiking as much because it's affecting our other dual mandate, our other portion of the dual mandate. In terms of consumer prices, so U.S. July consumer prices up 0.2%, consensus 0.2%. U.S. July CPI excluding food and energy up 0.2%, consensus being up 0.2%. U.S. July consumer prices increased 3.2% from a year earlier. Core CPI up 4.7% over a year. So all this data pretty much coming in line with expectations. U.S. real average weekly earnings unchanged in July. Let's see. Fed swaps in lower odds of another rate hike this year. Analysts Fed expectations unchanged after report. Yeah, I feel like this is what everyone expected, right? So I don't think that this is CPI that drastically affects price action, really. As we see, if we take a look over in Thinkorswim at SPY, right, at 8:30 a.m., we got, move up, then we get a move down, and now we're kind of relatively flat to where we were before the news. So right now, this news not coming in is super impactful. We pushed higher overnight with China news. China apparently is reopening. I thought they were already reopening, or had already reopened. So who the heck knows? But that, has been a catalyst in pushing us higher. But again, where we want to focus on is where we finished the week. That weekly downtrend or that former uptrend support. Let me see here. I'm going to go in and double check. Yeah, so we actually, when we zipped up and we pushed up for a quick second, we pushed up right to that former uptrend support turned resistance once we lost it last week. So that's really important. That area is at 449.60. So 449.60 is really the area of importance here today. That, area will change as time goes on because that line is upward sloping. But we lost that support last week, and now we're coming back up to test it. If we can get back above, we can continue going up. But if we hold beneath, look out below, right? It's time for Put City, and we are going to be loaded to the teeth with puts to profit off of the downside. But I think it's very important that, you see that's exactly where SPY rejected when we started to push, when we got that data, right? We popped up, and that's where it was like, hold up, right? I think that's very important because you want to see your levels being respected. You want to see, the market paying attention and price action paying attention to those levels because it means they're valid. But yeah, right now we've got kind of this battle. And we've got SPY stuck between. We're peaking over the hourly downtrend once again. We tested it a number of times yesterday. Puts paid us twice yesterday. Throw a 2 in the chat for that. Puts paid us twice big yesterday, hitting off that same hourly resistance. And we'll see right now we're above it. We'll see if we remain above it. We keep testing it. So without really setting significant lower lows, at some point, we're likely to see that break. But the key there is like, okay, does that break turn into us getting back above that weekly uptrend support turn resistance, or does that just mean that we get stuck between those two? We'll have to wait and see. But right now, that's exactly where we are. We're stuck directly between those levels, and I'll go over that in our Loom video for my Facebook group members here as we go into market open. Now, let's see. Now, going back to our newsletter, media, shifting our attention to the media sector, costs in focus. Shares of Disney, ticker Diz, initially dipped 2% after hours on Wednesday after reporting the third straight quarterly decline in Disney Plus subscribers. While cost cuts helped push profit past expectations, subscriber growth continued to stagnate across streaming platforms. Later on, the stock reversed course to rise 3% after Disney raised prices for its ad-free streaming services. CEO Bob Iger also said additional terms on password sharing policies will be rolled out later this year, following in the footsteps of Netflix's. So it looks like, they're taking notes here from Netflix. Bob Iger says run him his coins also. For you guys who aren't familiar with Bob Iger, he's, kind of the stalwart CEO of Disney. He keeps trying to retire. They keep bringing him back because the company is struggling, right? Disney, for the most dominant media empire of the 21st century, Disney's been struggling in terms of like share price, and now they're trying to make moves. You see that ESPN made the kind of partnership with Penn to bring like sports gambling to ESPN. I don't doubt that Iger had a hand in that. He's also just trying to figure out what to do with ESPN. He's kind of trying to spin it off, maybe sell it. So he's really moving and shaking in crunch time, trying to make things happen for them. And I'm sure that bringing in, extra revenue by cracking down on password sharing is an easy way to help kind of alleviate the pressure that he's under. So, quote, although the streaming business continues on its march to profitability, there is a long, long road ahead. Noted Third Bridge analyst Jamie Lumley, quote, we expect that 2025 is a more realistic timeline to achieve profitability than next year. Yeah, if you want to get paid anytime soon, streaming is not the place to do it. That's for sure. Now, in more media news, no action. It's been 100 days since writers took to the streets to protest major studios' refusal to meet their demands for higher pay and better working conditions. And it looks like there is no end in sight. The last writer strike in 2007 cost California's economy $2.1 billion in losses, and the impact of this year's strike may have reached $3 billion so far. Even as actors joined writers in a historic double strike, it looks like the shutdown could go on for longer as major studios refuse to give in to key demands. Note that 39 independent productions from smaller studios have been cleared to shoot during the stoppage. For now, Netflix is best positioned to weather the strike's impact, according to Seeking Alpha analyst Yuval Rotem, given its content slate and international production capabilities. I did see that, we talked about that as Netflix went into earnings, kind of their position to, I guess, better weather the storm. You guys know Netflix is notorious for the international shows where the mouths don't match the speech. So they're probably just like, hey, we'll give you guys a few of those until American workers want to act right. And also, I guess, based on their content slate, they've already got enough content kind of in the queue to the point where they're less affected than these general studios. I mean, I want these actors to get paid, but I also really want the movies that I want to see to come out on time. So it's tough. We're all a little bit selfish, and I want to see my movies, right? My movies that I like. So hopefully they come to some type of, amicable amicable agreement soon, right? Now, let's see. Tech passed the chips. More than 460 companies have submitted statements of interest to receive funding under the CHIPS Act, according to the White House a year after it was signed into legislation. The nearly $53 billion legislation, which provides tax credits for domestic semiconductor manufacturing, is aimed at boosting America's share of the global semiconductor market as it seeks to reduce its reliance on Asia, notably China, right, our feuding partner, following disruptions caused by the COVID-19 pandemic and geopolitical concerns. Since its signing, companies have announced billions in investments in semiconductors and electronics, including commitments by Intel, ticker INTC, Wolfspeed, ticker Wolf, and TSMC, ticker TSM. Despite this momentum, semiconductor stocks were largely in the red yesterday, led by sharp weakness in NVIDIA, something that we've been watching this week, right? NVIDIA was one of the plays that was mentioned yesterday. NVIDIA puts also paid very nicely. Mentioned NVIDIA longer swing puts 2 days ago before we got the major drop yesterday, and those have paid very well as well. So despite, all these different companies being involved in what's happening with chips have also seen a massive run up. And what goes up must come down, especially when you're starting to see a lot of these companies like, we've got AI in the docket here. We've got it loaded up into the queue, but it's going to take a while for it to, kind of really do its thing. A lot of companies are seeing that and they're like, oh, okay, well, maybe NVIDIA actually should not be at $480 per share, but it's also just healthy. It's healthy for stocks to have pullbacks. It's healthy for them to come back. So that exact same thing is in effect here. We're in the middle of a double top breakout on the daily for NVIDIA. We got that yesterday. We closed above price target number 1. NVIDIA gave great entrance yesterday, but it still has further down to go unless we get back above 440. So NVIDIA beneath 440 is bearish and it can continue to go down. Does that mean that it drops today? No, we sold off big yesterday, right? We sold off huge yesterday. We opened at 442.74. We closed at 425, right? So you don't just shed $20 and, millions, potentially billions of dollars in valuation to just continue to do that, right? You can, but I wouldn't be surprised if we had a little pop ski on NVIDIA. But it's just important to recognize that longer term, right, when we talk about in the coming days/weeks, it remains bearish as it fulfills that double top. Now, it does have earnings coming up on August 23rd, the day before my birthday. Hey, there we go. So the day before my birthday, they report. So we'll get more news, on them. But as of right now, NVIDIA bearish, along with, pretty much the rest of the market, the way things are going with SPY's weekly close last week. In terms of today's markets in Asia, Japan, we're up 0.9%, Hong Kong up 0.2%, China up 0.3%, India down 0.5%. In Europe, the FTSE in London down 0.1%, Paris up 0.8%, Frankfurt up 0.4%, the Dow up 0.5%, S&P up 0.5%, NASDAQ up 0.6%, crude down 0.3%, gold up 0.2%, Bitcoin down 1%. We got the CPI data. We got the initial jobless claims. The initial jobless claims, the reaction, right, based on what we've seen in the past, could be bullish. And we had the CPI in line with expectations. So we really don't know because, like I like to say, a lot of times big money uses these data drops as a smokescreen to do what they were already going to do. There's been times when we've got better than expected, unemployment data or better than expected inflation data, and the freaking market sells off huge. So at this point, I believe that whatever they have on the docket to do is what's going to get done, and it'll be an interesting next 2 days. It'll be risky to do any and everything, so understand that. No one is making you push the trade button. Understand that it will be risky to operate, right? You can still get paid. We got paid freaking handsomely yesterday, right? We roasted SPY to the downside once, came back, roasted SPY to the downside again. If you took NVIDIA paid big to the downside as well, right? There's still money to be made, but you got to make sure that you understand the circumstances under which you're operating and form your expectations accordingly, right? Form your expectations accordingly. But, I'm very excited to see kind of where we close heading into Friday, and that makes for a great long swing opportunity. As I've been saying, moving forward with puts to the downside, if SPY remains under what was our former weekly uptrend support. Now, what else is happening? We'll finish up here with our rapid fire bullet point rundown. U.S. crude oil climbs to 2023 highs driven by tightening supplies. Coach owner Tapestry, ticker TPR, and talks to buy Michael Kors Capri, whose ticker is CPRI. Maxine Waters voices concerns over PayPal's stablecoin launch. Roblox dives as engagement, user growth disappoint. Trade Desk TTD slips as earnings guidance failed to impress. Target and Starbucks expand Drive Up partnership. Don't know what that is. Maybe it's like you drive, or Drive Up might be a company. No idea. Something I have to look into, after hours here. Wynn Resorts, WYNN, tops expectations as Macau results shine. So I guess, Macau has always stood tall as like a gambling haven. Looks like it's doing great things for Wynn still. China directs all mobile app providers to file business details. Plug Power, ticker Plug, slides after piling up larger than expected loss. And then Novo Nordisk raises outlook on strong weight loss drug sales. So, that actually was something that I probably would have been willing to risk it on, was the companies Eli Lilly and Novo Nordisk reporting earnings, because, you've heard me talk about Eli Lilly, you've heard me talk about Novo Nordisk. Those two companies have just developed these smash play weight loss drugs that have been just an overwhelming success and everyone loves them. I'm not here to debate, the validity or the morality of weight loss drugs. All I know is they're, a blockbuster rock star product for these companies. And both of them have absolutely crushed it in terms of gapping up this week and just, being really strong. So shout out to Novo Nordisk. And shout out to Eli Lilly, kind of like the Michael Jordan, Scottie Pippen right now of that space. But that'll wrap us up and, take us out neatly for the pre-market prep session today, August 10th, 2023. As I've said previously, right, we're running a sale, birthday sale, para mí, right, birthday sale for me. We don't often do sales, but if you know somebody that should be out here working, multiplying their money in markets, or someone who is struggling with the same issues over and over again and ultimately throwing their money down the toilet in markets, make sure you let them know that they can use code MyTurn at checkout at adamhollandeducates.com in order to get our largest discount ever to invest in themselves when it comes to multiplying their money in markets. So friends don't let friends stay broke. Get out there, share the word, and let's get this bag together. Speaking of get this bag, that's exactly what I'm going to get to. Breaking down my Loom video analysis in the Facebook group and getting ready for another great day. So everybody have an amazing rest of your day. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.